Hello everyone, welcome to Just Invest Today, and today we're talking about Charlie Munger, man. Munger just came out on Bloomberg and said that he thinks the market is way more overvalued than the whole tech bubble of the 1990s. That's just crazy to think about, man. So let's read some of this. Berkshire's Munger says now even crazier than the dot-com bust. Guys, do you think this is actually gonna happen? The dot-com bubble, the dot-com boom and bust? Like, I understand like the market we're in, it's been going crazy, but just thinking about that, it's like we should probably have our money on the sideline if we really believe this is true. Can you like this video, subscribe to my channel? I'm on the road to 1,000 subscribers. Can you help me out? Thank you. I'm gonna provide so much good content for you guys, man. Charlie Munger told a conference Friday that the markets are wildly overvalued in places that the current environment is even crazier than the dot-com boom of the late 1990s that led to the bust. I consider this era even crazier era than the dot-com era. Munger also said that he wished the cryptocurrencies didn't exist and praised China for taking action to ban their use. So this is kind of crazy, man. So he says there's some sectors that are overvalued. I'm thinking something like Tesla, man. Tesla at $1 trillion market cap is just crazy. A PE of 329. So that's the stocks in the market. They're not generating crazy amount of profit, but they're still hugely overvalued or valued very highly. Snow barely generates that much money. It has $592 million in revenue, not even profit. And it has a market cap of over 100 billion. That's crazy. They got Carvana, $43 billion stock, no profit. So you got to realize that half of the market now are just companies that are unprofitable, but they're still making, they're still just generating, they're still getting crazy valuation markers on them. So that's what Charlie Munger is seeing. Just look what the S&P has done. This was 1990. Look at the huge drop in the S&P, then went all the way back up. And then the 2008 crisis back down. And when you really think about it, we've had a 10-year run since 2009, just basically straight up. So, so just thinking about that, say the market crashes, man. If the market does crash, we can see some like just mayhem. Like imagine the market take a huge 50-60% haircut. That would be crazy for the market. And then Munger says about the cryptocurrencies, I don't agree with Munger on the cryptocurrencies. Some of the cryptocurrencies are garbage, like all the Shiba and all that other crazy stuff going on in the market. But I believe that Bitcoin, Ethereum, those are all solid coins, and they can actually be like a substitute for something like gold, right? And I guess Munger is old, man, so he doesn't really see that in that type of light. But I really do believe that, yeah, Ethereum, Bitcoin can be the next gold if you really put it in that frame of mind, because it's just somewhere you can kind of decentralize your money and not depending on the government. So that's how I see it. The S&P 500 index has more than doubled since its pandemic lows of the March last year, while Bitcoin is up over 1,000%. Investors have poured almost 900 billion into equity funds in 2021. That is a crazy amount, exceeding the combined total from the past 19 years, man. So that's what Munger thinks. And then he talks about China and how Australia should actually bridge the gap between China and the US to kind of get it back together. So man, what do you guys think about this? Do you think we're in a bubble time? Charlie Munger is right about his thinking that this is just worse than the freaking 1990s tech bubble crash? And what should we do about it? Like, should we have our money on the side? Should we just ignore it and keep our money in the market? What do you think, and what's your opinion on this, man? Guys, please like this video, subscribe to my channel, and I'll get back to you in the next video. Peace!